PantheonAI presents Markets Rally, Bitcoin hits $101,000, Warner Bros. Breakup, New Pope Selected. Welcome to the PAI Morning Briefing. I'm your host, and with me today is Host B.
Hey everyone, great to be here.
And the date today is May 8th, 2025. Good morning to you all. Hope you're ready for a real deep dive into yesterday's market action and what's happening economically today.
Absolutely, it feels like there's a lot to unpack. From the major indexes all the way down to some really specific company news.
Exactly. Let's kick things off with a quick look at the market numbers from yesterday. The S&P 500, it finished up by nearly 1%, sitting right around 5,718.5.
Okay, so a solid day for the S&P. How about the Dow?
Even better on the Dow Jones. It hit roughly 41,769, an improvement of about 1.1%.
Nice. And the Nasdaq?
The Nasdaq wasn't far behind, ending the day just under 1% higher at nearly 18,091.
So, pretty much a green board across the big ones then?
Pretty much. And our smaller cap, Russell 2000, it stood strong too, gaining a bit more than 1.5%, finishing around 2,035.
That's a healthy gain for the small caps. But, it wasn't just traditional stocks making moves yesterday, right?
You got it. The crypto market added its own twist. Bitcoin surged to just over $101,000, which is an increase of more than 4%.
Wow, over $100,000 for Bitcoin. That's a big jump.
It is. And Ethereum, the ever-volatile workhorse, climbed by an impressive 13%.
13%? That's huge.
Yeah, it settled at about $2,052. So whether you're into hedging or actively trading these digital assets, you can't deny the crypto wave is still rolling in with surprising force.
Definitely, it adds another layer to the market picture. Speaking of that picture, digging a little deeper into the trends, it really feels like investors are trying to dance to a complex rhythm right now.
Oh, for sure. On one hand, you have this robust equity performance, which points to that broader economic recovery that many were cautiously optimistic about.
Right, that's the positive beat. But then the crypto surge, that adds this whole other layer of unpredictability.
Exactly. It's exciting, but it also makes you wonder if we're in for more volatility in the short term. It's kind of like walking a tightrope after you've had a bit too much coffee. Thrilling and maybe a little treacherous.
That's a good analogy. One of the key themes we're seeing lately is this interplay between acquisitions, foreign currency swings, and even big sporting events, surprisingly.
That's right. Take Flutter Entertainment. The owner of FanDuel, they made headlines a couple of times.
Yeah, I saw that. They actually faced pretty considerable losses from that expensive college basketball tournament in the U.S., the one that somehow had no upsets?
Yep, that's the one. Despite those losses, Flutter has still managed to beef up its earnings guidance.
How are they pulling that off?
Their optimistic outlook is driven by strategic acquisitions, and they're also benefiting from favorable currency movements. It's like mixing a cocktail of risk and reward with a splash of strategic patience.
Interesting. It really does make you ask. In today's market, is taking calculated risks the secret ingredient?
Could be. Also making waves is Warner Bros. Discovery.
Ah yes, the potential split.
Exactly. Reports suggest they're considering breaking up that massive media conglomerate. It's got industry watchers speculating like crazy.
I can imagine. What are the big questions there?
Well, the immediate tax implications are a big one, and then the long-term focus such a move might allow for. Historically, when these giants split into smaller, more nimble pieces, market reactions can be mixed.
Like trying to decide between one huge coffee or a series of espressos?
Huh. Yeah, kind of. In either case, a split could offer more value visibility to investors, but it definitely comes with its own set of integration challenges.
Makes sense. Shifting gears a bit, there was also a concerning report about U.S. productivity, right?
Yes, the secret sauce of our economy. For the first time in almost 3 years, overall productivity has actually seen a slip.
Wow, that's not good news.
Economists are pointing to the lingering effects of that tariff war, affecting not just output, but also muddying the waters on employment shifts. When productivity falters, it really raises questions about the underlying resilience of our economic engine.
Right. If your secret recipe is missing that key ingredient, even the best chef struggles.
Exactly. Speaking of economic recipes, another story catching our attention is Shopify.
The e-commerce giant. I heard their stock dipped.
It did, on reports of lighter guidance amid uncertainty. The company admits that while their merchants might face less exposure to the previous tariff policies championed by former President Trump,
Okay.
there's still lingering uncertainty on the horizon. It's this delicate balance, you know? How do you stay optimistic about future growth when external economic policies keep throwing curveballs?
That's tough. So for Shopify, it's all about adapting?
Pretty much. Adapting to this rapidly evolving trade environment and trying to keep the momentum going. It definitely makes investors wonder if they should be ready for both sunny days and market showers.
It sounds like it. And just when you think that's enough complexity, we've got a major regulatory twist from the political arena.
Oh yeah. In what some are calling a dramatic turn, the Trump administration has decided to ditch a controversial Biden AI chip rule.
Okay, that's a big policy pivot.
Totally. It leaves the market speculating like crazy about what comes next. Regulatory changes like this can quickly alter the competitive landscape, especially in a critical industry like technology.
So it raises a lot of questions then.
Absolutely. What tech innovations will emerge now in this shifted climate? How quickly will competitors scramble to adjust? It's a fascinating situation, and a stark reminder that sometimes policy can be just as unpredictable as market trends.
That's a really good point. And all these individual stories tie together when you look at the sector analysis.
They really do. In the tech space, you see clear signals of innovation being tempered by these regulatory headwinds we just talked about. The ongoing adjustments in policy, whether it's from the Trump-era decisions or new regulations coming, mean tech companies need to balance agility with caution.
Right. And then energy and finance. They're impacted by global economic factors.
Exactly. Things like currency fluctuations and changes in consumer demand, which are heavily influenced by both international trade and domestic policy. There's this real sense that every sector is interconnected. Shifts in one area can ripple through to another.
Like that rumor of a market split causing tremors in investor sentiment.
Precisely. It's also crucial to zoom out and consider the global market implications here.
How so?
While the U.S. is still a central hub, investors around the world are watching closely as the balance of power in sectors like media, technology, and digital currency shifts. Global markets are so intricately linked now through supply chains and investor sentiment.
So a decision in the U.S. can really affect things elsewhere?
Absolutely. A move by a major company like Warner Bros. Discovery to split up could embolden markets in Europe and Asia to reassess their own corporate strategies. Similarly, as U.S. productivity wanes slightly and companies like Shopify navigate trade winds, international investors are really weighing in on the future of global trade norms and investment strategies.
So even though we focus on regional headlines, the ripple effects are totally worldwide.
Exactly. And as we pull all these threads together, it really highlights the importance of a diversified approach, not just in investment strategy, but in understanding market trends.
I think a lot of listeners might be wondering, is it time to shake up my portfolio or hold steady?
Right? And the truth is, there's no one-size-fits-all answer. The strong performance in cryptocurrencies like Bitcoin and Ethereum might suggest that a higher tolerance for volatility could be rewarded,
while traditional equities offer something more stable, maybe less dramatic.
Exactly. It might be the perfect moment for people to consider how these global market experiments in digital currencies are influencing their long-term strategy.
Good point. And stepping back to look at what the experts are saying, many seasoned analysts are calling this a transitional period.
Yeah, moving from an era where macroeconomic factors were the main drivers to a time when tech disruption, geopolitics, and even sports events can simultaneously sway the scales.
One expert you spoke to had an interesting take, right?
They did. They quipped that the markets feel less like a well-oiled machine and more like a high-stakes poker game, full of surprises and calculated risks.
That's pretty accurate these days. And I guess that unpredictability is kind of what makes this landscape so captivating.
Totally. Every twist and turn is an opportunity to learn, to adjust your strategies, and sometimes, honestly, to even just have a laugh at the absurdity of it all.
A bit of humor definitely helps.
It does. I was actually thinking the other day, if the market had a sense of humor, it might say, "You think you plan for every possible outcome? Hold my beer."
Haha, that's perfect.
And while the joke feels like it's on us when volatility surprises us, it's these moments that really force us to sharpen our skills and adapt.
Well said. So, circling back for a final look at the key stories of the day?
Right. Let's recap. We started with Flutter Entertainment's robust earnings guidance update, reiterated in lots of articles. Despite those setbacks from the expensive, upset-list March Madness, They're optimistic thanks to clever acquisitions and favorable currency swings.
Got it. Then Warner Brothers Discovery and their potential split.
Yes, that could really redefine the media landscape for investors who like the idea of breaking up big conglomerates into more manageable, transparent pieces.
Okay. And the concerning news about U.S. productivity?
That's a big one. After an upward trend for 3 years, we're seeing hints of a slowdown. Economists are questioning if external factors, like the tariff war, might be the root cause. And this isn't just local. It's a global signal that trade and policy forces can really dampen even strong sectors.
Right. And Shopify grappling with that uncertainty from tariffs?
Exactly. While some see it as a pause or maybe an opportunity, others are bracing for an erratic market. And finally, the shift in regulatory policy with the Trump administration stepping away from the Biden AI chip rule adds another layer of complexity in tech.
So, lots of interplay between policy, technology, and market sentiment across all these stories.
Absolutely. Turning to our detailed sector analysis again. Technology is really in the eye of the storm, right? Rapid innovation colliding with regulatory uncertainty means tech investors need to be vigilant.
And energy and finance are navigating tricky transitions too.
They are. Energy with shifting global demand and geopolitical factors, and finance wrestling with growth potential versus external risks, like fluctuating productivity and policy uncertainty. Each sector needs its own strategy, reinforcing that diversification isn't just a buzzword, it's a guiding principle.
And all this has global implications, of course.
Definitely. Investors beyond the U.S. are equally impacted. Cracks in U.S. productivity and policy shifts send ripples throughout Europe, Asia, and beyond. Global supply chains, changing consumer behavior, emerging markets, they all play a part in this larger tapestry. The world's a giant interconnected network now.
Understanding one corner helps piece together the whole picture.
Exactly. Before we wrap up, I wanted to sprinkle in a few expert insights and predictions. Many experts agree that caution should really be the watchword in the coming weeks.
Caution. Despite some of the optimistic news?
Yes, while upgrades and acquisitions are encouraging, there are warning signs like pressure points in productivity and regulatory uncertainties we just can't ignore. Some advisors are even predicting a kind of dichotomy.
A dichotomy?
Yeah, on one hand, continued growth in tech-driven sectors fueled by strong crypto performance, and on the other, a really guarded approach in traditional sectors, still grappling with policy-induced unpredictability. It's almost like the market's hosting its own tug-of-war between innovation and regulation.
That's a great way to put it. And it leaves us with a lot to think about as we chart our next moves.
It really does. I want everyone listening to take a moment and consider these questions. Are the soaring numbers in crypto a signal for a broader shift in investor mindset? How will traditional equities react if regulatory and productivity trends keep trending downward? And what are the long-term implications of big corporate moves like the proposed Warner Brothers Discovery split?
Those are big questions.
They are, and they're not just rhetorical. They're the kind of questions that determine whether we just ride the waves of change or strategically harness them for lasting growth.
Agreed. So to recap the key takeaways from today's briefing.
Okay, first, the major indexes, S&P 500, Dow, NASDAQ, Russell 2000 DAS, they're showing solid gains, but smaller sectors and assets like crypto are having their own dramatic swings.
Got it.
Second, while strategic moves like acquisitions and favorable currency shifts are boosting companies like Flutter Entertainment, the persistent issues in U.S. productivity and that uncertain trade climate remain red flags.
Okay. And third?
Third, the need for innovative yet cautious moves in sectors like technology and finance amid global regulatory shifts. It just reminds us all to stay nimble in these unpredictable times.
Excellent summary. And a big shout out to PantheonAI, your information co-pilot, for helping us navigate this dynamic landscape.
Absolutely. As you head into your day, whether you're trading or doing investment research, I really encourage you to think critically about these developments. How might they impact your strategy?
Should you double down on tech despite the risks? Or maybe pivot towards more stable sectors?
Exactly. And with the global market so intertwined, what does this mean for your international exposure? I know we've covered a lot, and sometimes it feels like you need a PhD just to keep up.
Tell me about it.
But remember, learning shouldn't feel like a full-time job. Tomorrow we'll be back with more insights, deeper analyses, and maybe even a few more market surprises to spark your thoughts.
Looking forward to it.
In the meantime, keep asking questions. Reach out to our AI co-pilot anytime for clarity or further discussion. Thank you for joining us on this morning's journey through the markets and the news that shaped them.
Thanks for tuning in.
We look forward to connecting with you again tomorrow. Stay curious, stay prepared, and as always, keep your portfolio diversified. Until next time, take care, and remember, learning shouldn't feel like a full-time job.
Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.